Going? Comment allez-vous? How are you? Hey, it's a Tuesday. I think it's a Tuesday. Is it a Tuesday? Yeah, it's Tuesday. Only in America. Yeah. Hey, good morning. It's Tuesday. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. Let's do some technical analysis, huh? Well, let me know how it can help. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne McDonald. Yeah, well, guess what? I've been doing this a while. On Friday at FX Street, I will be hosting Trade Non-Farm Payrolls live for the 200th month in a row. Holy smokes, eh? Very cool. So, look, over 20 years of doing this, I've learned a few things. So let me know what you need, and I will do my best to share. I'd like to teach you how to be an independently thinking, disciplined trader with patience that uses a good swath of both fundamental and technical analysis. I want you to be well-rounded. Spot trading, great. Scalping, great. Swing trading, great. Position trading, great. Carry trading, great. I want you to be good at everything. Well, that's going to take a lot of time. That's okay. I've been doing these, what do you call them? They used to be webinars. I guess we'll call them live streams. Pretty much every day for 20 years. Pretty amazing, huh? So let me know. Let me know. So today we'll go through the calendar. We'll do gold, oil, Bitcoin. Oh, thank you, Darko. Yeah, by the way, you can, I don't know if, is it up yet? The live stream, is it scheduled at FX Street? I don't know. I think so. FX Street, you can go there, check them out, and sign up. In the description below the video is a link to my book. I think in a few years there'll be a link to my books. In my mind, I have approximately 6 books that I'd like to get out onto paper. So I'm thinking, maybe I'll start doing that. I'm in the process of sort of writing the first 3 or organizing the first 3. So that's kind of interesting. But the one I wrote back in, when was it published? 2008. A link to that book, Strategic and Tactical Forex Trading, is in the description below. Now, I would imagine almost everybody here has bought one. If you could go back to Amazon and leave a review, I would appreciate that. Okay? I'd appreciate that. Also in the description below, there's a link to FX Bootcamp, the community that I've been leading for a couple of decades. We have a few live groups. By the way, if you're in the swing trading group or the day trading group, you will have just received an email from me saying that Ryan needed to move the stop, look, and correct session that happens on Tuesdays at 2 p.m. He needs to move it just for today. Right, just today's session, he has to move it till tomorrow. So sorry for the short notice. He sends his love and respect, but it just had to happen, so it will be tomorrow. Oh yeah, thank you, Jim. Jim posted a link in the chat to an interview that I did over the Thanksgiving holidays that was published on FX Street. Thank you for that, Jim. Also in the link in the description below, there's a link to tradersway.com. They're an ECN. which means when you click the button, they put your trade into the interbanking system. There's nothing in between, no dealing desk, no B-booking, no trading against you, whatever. They just, boom, it's straight through processing. They earned my loyalty and respect long ago, about 7 or 8 years ago. So give Traders Way an opportunity to earn your loyalty and respect like they earned mine. You could either click the link in the description below or just type it in, tradersway.com. Okay, so here we are, Forex.Today calendar. Pretty busy week, huh? Hope you've been following the speeches. The last 2 weeks, there's been a ton of speeches coming out of the Fed. Okay, tomorrow, Beige Book, ADP, huge. Okay, you want to look at later in the Asian session the Aussie housing market, and it's been coming down quite a bit. Huh? It's amazing how much it's come down. Terry just caught 170 pips on Euro Kiwi. Define just caught. How do you just catch? How long were you in the trade, I guess is what I'm saying. Okay, so anyways, this is a big deal as far as the Aussie dollar is concerned. Looking out to Thursday, ISM. Okay, ISM. Now, what about the German news and what about PCE? Well, PCE, okay, well, I guess we got to put them in there. I was going to say it's going to be overshadowed, but I suppose not. So let's do that. Okay, let's do that. PCE is the measure of inflation that the Fed uses. Okay. So really, they use this, not CPI. So yet another measure of inflation. Okay, and then zipping over to ISM, which you want to do. And I say this in the article. I guess I should bring it up. Okay, so I said we want to look at the employment subcomponent of ISM. Okay, as well as the Challenger Gray and Christmas report. And so that's where this would come in particular services, not just manufacturing, but still you want to put those into your model. Was that right, Terry? So right before 5 p.m.? Yeah. Yeah. That's a pretty big move in that amount of time. So congratulations. Okay. And then non-farm payrolls on Friday. Again, I'll be at FX Street. I think I could probably bring that up. Let's see. It might be under video. Here we go. Let me get you that. Okay, we can look at the Euro Kiwi trade, for example. But before we do, let's take a look at this. Okay, let's look at this. So now that I was nice to Terry, let me be mean to Terry. Terry, will you give me permission to be mean to you? Okay, Euro is strong and Kiwi is strong. So I'm glad you made money, but on the, let's say, medium to longer term, yeah, it doesn't make any sense. So I'm glad you made it, but you could have easily lost it as well. That's the point. So where you made money, most likely, let me zoom in here. You made money on this little blip right there. Oops. Okay. That's where you made your money. And on the long run, that's a pretty small blip in the matrix, huh? Yeah. All right, Aussie's recovering off the bottom of our channel. Oh, is that right? Well, that would have been different, right? Let's say Hope says Kiwi CAD. So that's different though, right, Hope? Where there's the long term on Kiwi, there's the long term on CAD. That would make more sense, wouldn't it? So it's not like I'm not analyzing, you know, again, like let's just say, so Terry made 170 pips. And let's say the trade that I put together lost 170 pips. So you're like, well, Terry's trade was better than my trade. Well, yes and no, but you got to look at sort of probabilities. Right? So what do you think would probably happen? Which one would probably make money? The one that you're trading two strong currencies against each other, or you're trading one strong currency against one weak currency? Which one is most likely to make money? And then you start with that logic first, right? Right? So it's probabilities. Okay? That's all. Because what we have to do is we start with a strategy. So you could say, well, this one looks like it's been strong for a long time. This one looks like it's been weak for a long time. So now you go look for a technical setup in which Kiwi is beating CAD. Right? That's all. So then you're like, okay, so let's pick on, we want to buy Kiwi, we want to sell CAD. Okay. Okay. And then what? Okay. So in this time frame, we can only be bulls. Okay. On a higher time frame, if the double top was going to hold, it'd be more like, so Faith was saying something about 82. Well, what that's talking about, okay, is a swing trade. Actually, it's a position trade. So if you were a bull, you would expect something like that. Okay. Okay. Yeah. Okay. That's all it is. So that's for the month of December if you're a bull. Now, of course, all this can change, but fundamentally, whatever's going on here is likely to remain. There could be a break, like let's say this could come down for 2 weeks and then go up for 5 or 8 or 10 or 12. Okay. Now, so what's going on? Why is it going up now and not having the pullback that we're talking about this way? Okay. How come it's not pulling back yet? Well, first of all, no one's taking profit or getting out. Okay. But look at what's going on here. What is that? That's the buy zone. And this is the take profit zone. So maybe, just maybe, we don't know, it does one of these things, right? That's one possibility. The second possibility is that it continues up for, let's say, a week or two, and then it rolls over. Okay? And that's a counter trend. Well, Terry says, you knew maybe it was going against the fundamentals. Well, in this case, I'm not even talking about the fundamentals. So when I do something like this, okay, that's not fundamental. That's a trend. That doesn't explain why the Canadian dollar is weak. It doesn't say that oil's collapsing on deteriorating global macroeconomic data. It's just the Canadian dollar's weak. Okay? And trading a strong euro and a strong Kiwi against each other, that's not fundamental. You didn't make a fundamental mistake per se. You didn't even consider the fundamentals. There was nothing fundamental about it. But it's still, I would say, based on probabilities, right, Terry? Based on probabilities, you probably could have found an easier way to make money. But you probably couldn't have found an easier way to lose money. But you won. Good. But it was kind of like you robbed a liquor store for $200. One day, you're going to rob the liquor store and you're going to get shot in the gut with a shotgun. And you're like, damn, $200 isn't enough for this gig. Or you get 10 years in prison for robbing a liquor store for $200. You're like, damn, this gig doesn't pay enough, right? You didn't get compensated for the risk you took. Now you got 170 pips. Like, that's nothing to laugh at. But I would argue it was probably not enough for that kind of risk. That's all. Sure know what I'm talking about? What's up, Petey? All right, pound's still growing here. US dollar is still weak. Now let's go into a smaller time frame and do the same type of analysis. Aha! That's where Terry made the money. Short term. Okay. Kiwi stayed on a long-term trend. Euro gave back on the long-term trend. And that may or may not be short-lived, but still. Okay. Aussie's recovered, pound a little bit. Now, Aussie recovered last night, and Kiwi strong for the same reason. The Chinese government has responded to the, protests in the streets. And they changed some language in their, and it's been interpreted as China easing restrictions. I think that's a bit of a leap of faith. But nonetheless, everything bad is now good. So the lockdowns are maybe not as bad. And so now there's some upside hope. And that's what these rallies are. Okay. US dollar currently strong and Japanese yen currently strong. I'm happy with the strong US dollar, although I think it's probably premature. It's not for me to judge. The other thing is I like yen going up on the short term because I am a bear on the long term. I would like to sell the Japanese yen. Aaron says, hey, these major news plays always come out at major support and resistance levels, right? Yeah. Yep. Lewis says, another choppy day in the stock market so far. Well, once the market opens, and I guess it's just about to open, I think there's going to be a relief rally. So why don't we take a look at that based on everything that I just talked about? So we're at a key level here that I discussed yesterday in the day trading group. Okay, so on the shorter run, you probably want to mark this. This is the short zone from yesterday. Now let's go into a smaller time frame to watch the open. Okay, so you can see from yesterday, I know there's a lot of lines here, but look, we do this stuff in the day trading group, right? So anyways, this is yesterday's move. Do you guys remember I was short yesterday at this time? So here we are when the day trading group met. We talked about this area here for the second short, came back, it's come around. And now, will there be follow through? I don't know, but maybe. Okay, but sort of the word on the street is it's not as bad. The news that drove this down, the word on the street is it's not as bad as we thought. Okay. So what? Don't be shocked if we have one of these today. Don't be shocked. Okay? Don't be shocked. So here we are. Oops. So the two lines in the sand are really this bottom and that top for today. But the point I was talking about last night, if you go out on a higher time frame, oy vey, we're at a very interesting price now, huh? What do you think of that? Huh? Oy vey, huh? We're only talking about today. We're only talking about this little move here. Okay? Now, seasonality says we should probably have an up before the next down. But if it wants to fall, it can fall, and that's that. And obviously, China not reopening would be the thing that brings it down now. Okay? Yeah. So today is very, 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 very important because if it rallied up here, it would unwind everything that happened yesterday. Okay? So that's why we got to watch these lines in the sand. The bigger one is sort of here. There's another one there, obviously. So we'll see. Are we going to stay below 4,000? Let's watch it for a bit. Okay. So the area that we're watching is this. And this. Okay. So if it drops and flips, okay, that's important. Now, I don't think the news that came out last night I didn't think it was that in regards to China's COVID policy, I didn't see it as any significant change. And the media is kind of reporting that it is a significant change, that it's some sort of capitulation. Maybe in the United States we'd capitulate that quickly. I don't know if China would capitulate that quickly. So one of the big things they said yesterday is they're kind of, some people look at it as sort of like a tunnel out of their policy. How does China get out of its failed policy, if you want to call it that, while saving face? So in response to the protests, they said, okay, look, we're locking everybody down because only 40% of elderly are vaccinated. So let's vaccinate a whole bunch more elderly, and then we can remove the lockdowns. And people are like, oh, that's a capitulation. Maybe it is. So what are they going to do to vaccinate more elderly, I guess, is the next question. When is it going to happen? When is it going to be done? But, okay, so we'll see how the market responds to that news. And that's what you're playing here. Okay. And so therefore, if you get one of these today, that's important. Okay. Because I think the stock market would go up for about 3 weeks, depending on what happens essentially today. What do you think about that? So we'll watch this a little bit, and then I'll switch over and do gold, oil, and Bitcoin. Darko, your question is, have I ever had a situation where the account is almost 90% in profit from size of balance? I don't know what you mean, like you've doubled your account. That would mean you're over leveraged, if that's what you mean. But I'll answer it this way, and many of you already know the story, so I don't have to go into it in great detail. But I ended a webinar and shut down my coaching account, and I had my trading account open. And then I walked away, went and got a coffee, used the restroom and everything, and I came back, and apparently I hadn't ended my webinar. It was live. And I think I had something like 120 or 130 trades open. And I had 98% available margin. So I'm not sure if that's what you mean. And that's simply because it's not that I only have winners. No, what that means is I only cashed out of losers. So I might have had hundreds of little trades that got knocked out at break even, or minus 30 or minus 40 or minus 50. And over the months, they all disappeared. Why? I exit the losers. But I never exited the winners. So that's, so after 3, 4, 5, 6 months of trading on that particular year, I was able to keep my carries. So you didn't see the 300 losers. All you saw was the 100 winners. And the cool thing is they were all triple digits, every single one of them. 100, 200, 300, 400, 500, 600, 700 pips each, plus the carry. Yeah. But that was that particular year. I don't remember the situation. I like that day. I remember the day clearly. It was my office in Atlanta. I remember it happening. I wasn't sleeping very much back then, so I guess that's where I made my mistake. So I could probably backtrack and figure out what year it was. But yeah, it was one of those years where the trends were pervasive and there was never a reason to get out, except pullbacks. Pullbacks knocked me out, but trends kept me in. Okay. So the way to manage that many trades, I suppose it's important psychologically, is you move the stops. And you kind of move them kind of in tangent with each other, not independently, but all together. So that you're like, if there's a certain percentage pullback, if you will, or a certain pip pullback, you exit the trade, all the trades. But then to help, like what you don't want to do is focus and say, well, if you had 100 trades open and they all pulled back 500 pips, how many pips did you lose? You don't want to think about it that way. It's more like if there was a dramatic change in market conditions that took you out of the market, how much do you have locked in? So it's easier to sleep at night knowing that if you woke up and there was a 500 pip drop in the yen pairs, then no matter what, you have 50,000 pips locked in. Right? And it's easier to sleep that way. But you might be saying, but Wayne, you're risking 25,000 pips. You're like, well, you'll never be able to sleep. Plus, you'll never be able to hold on trades for that long. So that's where I started to learn about seasonality, actually. I started to notice that there were times when I'd get knocked out of a lot of my long-term trades, and other times of the year in which they seemed to just keep going and going and going, where the trend was pervasive and then the trend was perverted. And I'm like, dang it. Right? And you start to kind of try to figure things out. How long do you hold trades for? My goal would be, look, let's do it this way. I'd like you to think about your trading quarterly. Most institutional investors that I know think and plan based on the quarter, Q1, Q2, Q3, Q4. So A-Rod, like in a perfect world, for example, I would like to, let's say, start buying yen pairs in August and exiting yen pairs as far out as April. So I can start in the third quarter and exit at the end of the first quarter. So that could be a 9-month hold. Hey, you're like, dude, that's amazing. Well, once again, that would be a perfect world. But have I done stuff like that before? Uh-huh. Does it happen every year? Uh-uh. See, I do not make the market. Okay? And I'm not here to try to outsmart the market. So I'm not the market. I'm not smarter than the market. But the market dictates how much money I make. Because the market either gives me a trend or the trends fail because of the market conditions. I understand the fundamentals. I understand what should be and what is likely to be. And I understand the historic personality of these pairs. But I don't put all that together and try to be better than the market because it's sort of a fool's errand. So in years where there are strong fundamental trends, then it's my job to not only get into the trade, but stay in the trade. Like, think of it this way. A trade that moves 1,000 pips. Do you really want to be the trader that takes 20, 30 pips at a time? 30, 30, 30, 30, 30, 30, 30. In all the little ups and downs of a move that just goes 1,000? Well, what if instead of lots of little trades in and out, in and out, in and out, where you're picking up 30 pips at a time, you buy a trade, let it run for a while, it pulls back, you buy a second trade, let it run for a while, it pulls back, add a third trade, add a fourth trade, add a fifth trade. You should be able to, let's say, every time there's a 100 pip pullback, you add another trade. You could have one trade with 100 pips profit, another one with 200, another one with 300, another one with 400, another one with 500, another one with 600, another one with 700, another one with 800, another one with 900, and the first trade gets you the 1,000 pips. Well, that's only 10 trades actually. And once you've taken the trade, you move your stop and you let it run. Now, emotionally it's difficult, but physically it's not because you don't have to manage it that much. But you end up making a lot more as well. Plus, if there is a positive carry, you're collecting interest. So there's a lot that benefits a longer term trader. Now, the short term trader is also profitable. I think it's harder work. What I admire about shorter term traders, let's use the term a scalper. What I admire about a scalper is their innate ability to enter trades at support and resistance. Beautiful. You really need to have that skill. Okay? It's really important. Oh, lower low. Oh, snap. We're at the next level. So A-Rod, how long do you hold your trades for? I'd love to be able to tell you that I try to hold them to the end of the end of the tracks as long as possible would be great if I could answer it that. Lewis says, choppy. Well, there isn't a higher high on this chart. Down, 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 up, up. Down, 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 up, up. Down, 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 up, up. Okay. Down, 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 up, up. Down, down, down. Like, it's choppy, but it's only down. So it's not that choppy. If it's going to flip it, I would suspect it would be soon, but we'll leave it at that. Volume. Yeah, we could add some volume indicators. What volume ones do you like, A-Rod? We could add on balance. And to add a different type, we can add money flow. And then we have your traditional volume here. Okay. So this is the volume per candle, if you will. Okay, and this is adding up all the longs and all the shorts. Okay. Mon Passable Lob says, hey, Wayne, you were right. My prop firm scammed me. I'm very, very sorry to hear that. I'm really sorry to hear that. So what kind of volume do you see here? Well, that's not fair because it's only on a 1 minute chart. Let's go to an hourly chart. Probably better. Okay. So it'd be interesting if you use this, like if it starts to make a lower low, how would you feel about that volume? Okay. So what this is saying is, right? Either we're adding more bears or bulls took profit. But another way of probably looking at this, and you wouldn't use it this way, but it's kind of interesting. There's a bit of a divergence if you see, but that's not how you'd use this indicator. This is just bulls, okay, long positions, plus bears. That's all that is, okay? Longs versus shorts. And shorts would be a negative number, so you're adding a negative, which, so anyways, your goal here is to decide whether you're a bull or a bear. Okay, you see? This is OBV, on balance volume. Okay. So you can look at that. It's only, so I'm on what, an hourly chart, and it's only looking back 14, I think it is. Or does it not? No, it doesn't use that. Okay, it's just grabbing. Okay, that's good. Yeah, it's not going back. Okay, that's good. So yeah, it's looking, it's just adding up all the long positions, subtracting all the short positions, okay, over this period of time. Okay, does that look bullish to you? I went out to the daily chart. Does that look bullish to you? We're not looking at price. This is not price. What do you guys think? I was thinking about putting this in my book because I never covered it in my first book. It's interesting if you're trying to add something different, okay? If you're going to try, like, this isn't, it's kind of fundamental, it's not fundamental, but it's not technical either, okay? This funny stingray, I just wrote it down. I literally just wrote it. On balance volume, okay? Okay, you guys don't like this? You don't want me to do OBV? Well, there's something different if you want to also add volume. And this makes an index. So this goes back 14 periods. Let me just double check that. Yeah, 14. There we go. Goes back 14 periods. So you can change this to 21. It does. Okay. The thing is, it's an index. So, right? It just, right? So in this case, it's kind of trying to tell you overbought and oversold. But remember, amateur traders misread indicators like this a lot. They misread them, they misuse them. But maybe it's helpful. I don't know. Maybe you find it helpful. Okay. Maybe you find it helpful. So, like, was this top important? Ah, dang it. Sorry, I got a super expensive mouse, gamer mouse, which means I can't use it. Okay. Now, this one didn't get overbought. This one didn't get overbought. So maybe you don't like the 21. Maybe it's the daily time frame. So let's put it back to the standard. Oops. Let me put it back to the standard. Okay. A little bit better. You can play around with it. Is 13 better than 14 if you're using fib numbers? How about 8? Okay. Not terribly, right? All right. So, where do amateurs go wrong with all oscillators? Anybody want to answer that? How do amateurs misuse oscillators? What's the reoccurring theme of misuse? Not using them in context. Yeah, I suppose that's the right way of saying it, Hope. Where an amateur buys all the bottoms and they sell all the tops. By the way, that's how your amateur guru does it too. Or at least that's what they sell you. It's, as Hope says, though, you're supposed to use it in a context of a trend. So, for example, one rule of thumb is that you would ignore all of these you would ignore all of them in an uptrend, right? And the next thing is it's not the next mistake that amateurs make is they buy when it becomes oversold. What do you learn in the training course at FX Bootcamp? What's the better way? You don't buy when it drops below 20. When do you buy in an uptrend? Okay. What's the answer? Okay. It's when it drops below 20 and then rises back above 20. So it's not here. Okay. It's here. Now, this is interesting because now that means you traded just like an oscillator, just like RSI. Okay, so you're like, oh, it's just another oscillator. Yes, but RSI is measuring candles. Okay. But the money flow index, and just another index, is measuring volume. This is price. This is volume. Isn't that interesting? All right, Pete. All right, so I've taken too much time on this, so I apologize. So let's now do gold, oil, and Bitcoin. Okay, we have a top listed here. We are now on the 1 hour ranging with a slight lower low. Go further out. We are ranging on a 4 hour. And the battle that's going on is that based on a lot of seasonality, we can be in a risk-on trading mode really for most of December, maybe all of December. Now, every year is different from the last, but over many, many years, right? Many years have produced risk on. So we're kind of in this situation where we don't really have a risk on world, but that's what some people are trying to do. And we don't really know who's right or wrong. So like the way to work through this is if you're a bear, okay, there's this trade that you have that potentially would work, or this trade that would potentially work. And a bull is trying to do their thing too. So I analyzed this days before we got this pullback. And now a bull is trying to work its way this way. So there's no confusion going on here unless you don't have a bias. And if you don't have a bias, what to do? Nothing. There's nothing I can do. If you don't have a bias, you don't know what you're doing. And well, there you go. Okay. So right now we're caught in between. You see the cross currents that could possibly, that are happening in this zone where bulls and bears are both doing their thing. And wouldn't it be easier to trade here or here? James, they're in several places. Yeah. They're even on the free training course on FX Bootcamp's YouTube channel. Okay. So which one are you? Well, okay. If you're a bear, these are the prices you got to pay attention to. For now. If it goes higher, then the next one, the next sort of area you have to pay attention to would be this if you're a bear. That's all. Okay. Okie dokie. So that's the stock market. That's gold. Let's do oil. What do you stink? Could be a selling opportunity soon. And of course, if it doesn't, like it really should, if you think about it, like let's mark it this way. Right? Like, don't you think that if we go higher than that, it becomes less bearish? Like we would break the channel, right? So it seems to me for this to remain bearish, it really needs to stay under this price. So it smells like we're not going to make it above 80. What do you think? Oops. Okay. How are you treating this? Is this China reopening? If China's reopening, you want to be a bull. Now, maybe you're day trading this. I don't want to mess that beautiful chart up, so maybe we'll look at something else. Let's get rid of nat gas and turn this into WTI. There it is. Okay, and I'm going to change the template, and that's what I want to get to. So we will use traps. This is the trap and break strategy that I taught in the oil trading course. Okay. And so as long as we're below this area, okay, the market is bearish. But you can see that nothing dramatic has really happened over the last, right? Like there's support, there's resistance. What's the big deal, right? There's no big deal, right? You see how sort of like so if you break above or below that, do you think it's technically important? Could be a rabbit, could be. So hopefully people are not getting sliced and diced and all that kind of stuff. You're like, we could change this a little bit. Okay. So yesterday, oil seemed so far away. We knew this was the buy zone. So this little pullback here is great. Okay. It's not a precise, but it's good. And you see the target for today? The conservative target is $79.64. We knew that yesterday, 24 hours ago. The aggressive price is $80.56. But here's the big but. That's already done. That happened in Asia. The trade that's happening now is targeting $81.98. Of course, that's a fluid number because we haven't locked in today. So we're on our way to 82, maybe higher, according to this, if you're a bull. There's a lot of assumptions on this chart. One of the assumptions is that you're a bull. So you should already be in tomorrow's trade. Do you get that? Here's tomorrow's trade, which you should be in now. Because if you're just logging in to trade oil now, you're missing a lot to your trading. Yesterday, so we got to get above that. It'll probably look like this. If we're going higher, we got to get above that, right? So let me kind of mark that. La, la, la. Okay. So obviously we got to fight that. So you'll probably get okay. Now this doesn't incorporate Fed stuff and ADP and all that kind of stuff. It doesn't incorporate PCE. It doesn't incorporate interest NFP. It's just technical analysis. Okay, but do you see my point? If you're a bull, that's how you put these things together. And what I'm trying to teach you is if you're a bull, if you consider this a high, higher than that, then you're expecting a higher low. If you see that as a higher high, you're expecting to buy a higher low. And if we go and make a higher high later today, then tomorrow you're probably buying a higher low. So you're already done tomorrow's trade, and you're really planning Wednesday's trade, which you will take tomorrow. You see, you should always be a day ahead. See, when you go to play poker, when you walk in the room, you need to figure out who the sucker is. And if you can't spot the sucker, you're the sucker. In trading, the sucker is the guy that walks in and says, "Hey, what are we trading, fellas? Are we long today or short?" Easy money. Okay? So a bull is trying this. And that's tomorrow's target. Today is done. It's done. Okay, yeah, it might go a little higher. Whatever, it's still today's trade. Yesterday was when you should have had that plan. Anyways, cool. I think point taken, right? So we did the stock market, we did gold, we've done oil. Let's go back and take a look at the indices. Okay, dollar hesitating a little bit. Euro, right, stalled. CAD weakening again. Let's look at yen pairs. Then we'll call it a day, huh? By the way, my super secret, fundamentally based alert service, I've had a major breakthrough in a good way. I've been working on something for 3 months, and it seems to work now. So when I launch it, you're going to be super happy. It's amazing. Yeah. Yeah, really undoubt myself this time. Yeah. But here's the thing, you're going to love it. You're going to love it. Love it. Love it. Love it. So now I got to work together the launch. I'll see if I can get some time together, work on rolling it out to you. Beautiful. You're going to be amazed. Oh, I forgot Bitcoin. Oh, sorry about that. Yeah, let's go back. Bitcoin. Okay. I don't really have it doing a lot right now. So you kind of have to pick your lines a little bit. And it's not really trending that well up, down, or sideways. It's not even trending well sideways. But the way to read this on the shorter run is that it seems to have failed, at least currently, to have made a higher high relative to this high. But it's made a higher high relative to that high. So now that's where it gets really pissy. Now it's sort of like 50-50. So half the market's going to trade it like this, and the other half the market's going to treat it like this. And which one? I don't know. It's 50-50. So if today is considered risk on and the stock market goes up, yeah, okay, maybe on the short run. That's what a bull is thinking. That doesn't even get you higher than that. And a bear is, that's the plan for tomorrow anyways. This is a little off-putting. It went a little too high. What was supposed to happen today was this. So that's why I'm like, it's kind of 50-50. Hey, Elmer. It's sort of like, yeah, okay. Yeah. Now, maybe you go out to a higher time frame, like a 4-hour, and you're riding the 21, riding the 55, but it's sort of the third touch of the 55, so it's very, very sideways. If you look at the 5-8 cross, we call that braiding. That kind of puts me neutral. Go out to the daily, and now I got to really zoom in. Oops. And what the daily is telling me is we're held up above 15.5, waiting for the daily 21 to catch up. So this could be another sideways week caught between M3 and M2. And then maybe it moves next week. And that move would be to the downside, according to this chart. Okay? If you were going to fit in a swing trade into this trade, well, I would rather it be bearish and you get a down, an up, and you get the M3, M1 play. But it's lagging, and probably because of the news week. If you're a bull on this, you're also trying the same thing, just the opposite way. And that would get you to the 21 and probably down. So let me put one more scenario for you. S1 as a bottom, R1 as a top. And how about this? You ready? It actually moves up from here and then down to a new low. Oh no, huh? What do you think of that one? So Japanese yen is strong at the moment, and I want to sell it, which means I want to buy some of these pairs. And this might not be the right price, but it's the thought. Okay. Now I'm going to kind of watch this area right now on pound 165 maybe. So I'm going to watch that on the short run. Okay, CAD is being punished, so I'll probably skip this one. Okay, look at that move, huh? It's getting punished. Kiwi. Okay, now on the 4 hour, this is technically bearish. Okay, you see that right here, it's technically bearish. So someone's going to do this, but I might want to try something like that. Okay, USD, okay, sideways. So probably not this one. Swissy. Okay. Consolidating here on the 4 hour. So maybe a rotation to the upside there. Maybe. Keep an eye on that. Aussie. Okay. Going nowhere fast, but I catch that wonderful yield. Look at it maybe on a daily here. Okay. You notice how we never got above yearly R3? I mean, we did, I guess, briefly, right? But you notice how important it is? Super important, eh? Look how important that yearly R3 is, huh? So that's that. That's what I think. Hey, if this was a useful use of your time today, would you please click the like button? Half of you have not clicked the like button. So I apologize to those who found that this was a waste of their time. But maybe the price was right. If you'd like to learn more, I invite you to join fxbootcamp.com. The qualifications are hefty. You must have 88 US dollars per year. If you don't have that, it's very difficult to help you. Okay? Cool. And I guess I'll leave it to it. Peace on earth. May the pips be with you. May your profits be above average. Yes, I'll remind everybody, I sent out an email just before this session. On Tuesdays at 2 p.m., the day trading group and the swing trading group meet with Ryan for their stop, look, and correct session. Very, very, very interactive. I like to call it a some-on-one mentoring session. Well, he can't do it today. Something came up. He has to move it to tomorrow. Okay, so hopefully you got that email. So I'll see you guys later. Peace on earth. May the pips be with you, or may your profits be above average. Have a wonderful day. Cheers.